Yeah, exactly. It's like, hey, hello, everybody. Okay, the funny thing is, so we are live, just so you know.
Cool.
The funny thing is that I've told myself that in 2021, I was going to stop saying hello, everybody in the beginning. And then I literally just did it. And I was like, even like, don't do it. And then I'm just like,
do you do that every time you're on a Zoom too? Like when it starts?
Yeah, like in real life, I do that a lot. Like, I'll just be like, hey, like that. And then, so like my hands, like I don't know what to do with them if I don't do it. Like I end up being like, how are you feeling about like, we'll wait for people to kind of shuffle in. How do you feel globally, not like Lightship Capital specific, about like 2021? It's like a new year kind of thing.
I mean, I'm optimistic that we're going to get to our new normal toward the end of the year. But it's going to be a while. I'm excited that the entire year isn't going to be like in dire straits, but part of it will be.
I feel like that is almost exactly how I feel. Like I'm just like, it almost is like, you know, when like you have like a conditioner that you didn't really like, but then they redo the packaging and then you're like, maybe it's great. And then you get it home and you're like, no, this is the same old crap, but they just put like new with like a plus on it. And they're like, I was like, I got fooled. It's like the same old thing, but a new package. So then I just bought it again.
That's what you did. What you did.
One is like, just has a new label on it. Same old crap.
Oh, goodness.
People are like, this is too negative for the first week of the year. Whatever. Okay. Yay. So, hello, everybody. Welcome to the Cackle. So this is Entry Point's weekly Q&A where we highlight small businesses and startups and people having an impact on the community. And today we're talking to the glorious Candice Brackeen from Lightship Capital. I'm so excited. And we're going to talk about fundraising and building accessible opportunity in the entrepreneurial ecosystem. As always, if you have like questions or shout outs or comments or just whatever, put them in the comments and then we can kind of see them and we'll try to address them during the conversation or not.
We have something to talk about.
I know, exactly. Or listen to us ramble on. Okay. Tell us a little bit. So like, I've already heard this, but I find your whole like entire kind of career to be so interesting. So kind of tell us about like your journey through like entrepreneurship and then like what brought you eventually to venture capital.
Yeah. So, good morning. Thanks for having me, Emily. I appreciate it.
Yeah.
So, oh my goodness, it's just, I have a lot of energy. So I think that that's what's gotten me like to this place in life. So I'm originally from Toledo, so just a little south of Michigan, and moved to Cincinnati to attend the University of Cincinnati. I thought I wanted to be a teacher, and I love the comments I've already started. I thought I wanted to be a teacher, and I realized pretty early on that I don't like other people's kids. And so I kind of ran into economics in a strange way. I took Econ 101 because I needed to take an elective. Then during Econ 102, one of my professors says, you're pretty good at this. You should apply to the scholarship for first-gen college students. I said, sure. And really fell in love with the discipline. Just studying kind of macro and microeconomic trends and game theory. I just fell in love with that and niche markets. And it was that just got me interested in the way that society works and things work. So when I graduated, myself and some of the other TAs and students, we got together and created a consulting firm where we would go into small to medium-sized businesses and help them restructure. So it was not the most fun work, but it was really interesting because you could get to understand the moving parts of a business.
Yeah, that is really cool.
Yeah. And so I did that for 12 or 13 years, just at different companies all over the US. And then about 6 years ago, I got a wild hair to start my first tech company. one of my kids had gone on like a really junky.
Wild hair. I've never heard that saying before.
That now makes me 42. So,
I got wild hair.
Got a wild hair. And so I decided to start my first tech company. My oldest son, who's now 13, was in kindergarten, and he was asked out on a play date. It took us a long time to schedule, a lot of back and forth over text and email. And on the day I was supposed to pick him up, the mom wasn't there. It was a nanny, and I just hadn't expected it. He was playing Call of Duty, the online version, lots of cursing. And so I decided to build an app to manage expectations, and then build some kind of like AI in the back end to help parents make more informed decisions. So that was the first tech company. I raised a little over $400,000 with my co-founder. And then we ran out of money. And around that same time, everyone was finding out that venture capital is not distributed equally around the country, especially to those people who look like me. Yeah. And that's when, with my my two co-founders, Tahani Jones and Abo Vroom, from here locally, now they may both live in Michigan, I'm not certain. We decided to launch Hillman Accelerator. So it's a program that helps support women and minorities in tech and innovation. And there's lots of other things that I do, but that's my journey to this point.
Yeah, that's awesome. And then talk a little bit about Lightship Capital, like what you guys invest in and like how you kind of came to be like, oh, I'd like to have 5 jobs. I looked at your LinkedIn. I was like, damn, she's busy.
There's back to that energy. There's that energy. So, so with Hillman, the accelerator, like you have to fund the companies too, right? The groups, minority groups are really over mentored and undercapitalized. So while we could support companies through programming, could we figure out a way to support them financially? So a few years ago, I got remarried, met this amazing guy named Brackeen. He joined my team after he exited his facial recognition company. And we together decided that the way to capitalize these companies was through our own fund. I guess now it's 2 winters ago. So winter of 2019, we finished our paperwork to raise a $20 million fund, specifically focused on companies in the mighty middle. So the Midwest, I know I'm trying to get my mighty middle terminology down.
I do like that's like a couple, I know like a couple organizations that focus on that. And like, does seem to be like, there's so much similarity between the different entrepreneurial ecosystems in the middle. So
yeah. I think it was a Kaufman study that was done. So that's our focus. And then we have kind of 5 sectors that we invest in. The goal was a $20 million fundraise, and we've overshot our goal. And in the next quarter or so, we'll close in on $50 million to support. I did it. I did this thing. It's fun. It's a lot of fun. The best part of the work is like letting someone know that you're going to invest in their dream. So we've invested in 7 companies from the fund since July, and we'll make, quite a few more investments this year. The total will do about 35 companies over the total of 3 years.
So what did you think? Why am I doing that with my hair? Stop that.
Well, we're just here. We're here in our kitchens and living room, so we can do and say whatever we want.
I know. If it was like a live stream class or like best practices or something, I'd probably do all of the things. Like I like touch my hair too much and like all this stuff.
Well, I was playing with the chapstick right here next to my microphone, and I was like, she's going to hear this click.
Yeah, so. I do that with a pen that I like luckily am not holding. Like I'll do that a lot. Anyway, so how did you feel like with I feel like raising a venture capital fund during 2020 would be difficult, and also vetting startup companies to fund during 2020 would be difficult as well. Like kind of what is your perspective on like all of those things during like a global pandemic and all the other things happening?
All the other things like juggling life.
And like, kids at home, racial injustice, like
all those things. How do we say that? So I think that like, quite honestly, a lot of folks in the Black tech ecosystem, we felt prepared for 2020, right? Like we'd been fighting social justice issues, letting people know for years like that there was an inequity within venture capital. And so when it was time to for people to actually listen, we already had the story. And so we had been sharing that. And, if I think about raising a fund in 2020, we had already raised 15 of the $20 million by March of 2020. And so we were kind of already there. And then unfortunately, with George Floyd's death, or murder, I hate to say it was just a death. So when he was murdered, we started to see a different type of group come and approach us. People who really started to just understand that there was an issue with distributing finances equitably. And so we heard from lots more foundations, government entities, fund of funds, and they were then interested in investing. And that's what's gotten us over the hump. And, into this much, much larger number. Finding companies, the companies still exist. And I think that this, really cohort of people, or this vintage of company, has shown a level of resiliency that you wouldn't normally get to see during a normal time. It was just compacted all in those moments. And you got to see and we still get to see how founders move and shake and deal with obstacles. And so I think that it's actually put us in a better position. And I guess I'll end with, we got to meet all of these LPs in their living rooms with their kids running around and their dogs barking. And I feel as if we've been able to create more genuine relationships with people. Otherwise, we would have been on the road flying. And I guess that's how people were raising funds before. But I've raised and we've raised our fund from our kitchen and our living room. So I think that that's just put us in a really different position. It was challenging, don't get me wrong, but I think that fundraising is always challenging. And we just happen to be here at a moment where we have been, unfortunately, able to capitalize on a really ugly stain in American history. And will prove, and many other kind of Black GPs or GPs of color will be able to prove to people, it just took the money to get us going, right? And access to a larger network. So last year was an unfortunate situation, but I'm hoping that as a globe and as a human race, we're able to kind of move forward and past some of these really ugly issues.
Yeah, I think too, the data has shown for a really long time that a lot of underrepresented founders are used to that kind of constant navigation and dealing with obstacles and fighting their way through and figuring everything out, and that ends up with a more profitable company, a more resilient company. And so I feel that is, I'm sure that you guys will be able to kind of prove that out yet again in the next year. I'm so interested to see to watch you guys, and I am a entrepreneurship fangirl. We do research, but really it's hardcore stalking. It's oh yes, we're a research organization, but really we just stalk everybody. So yay. So what do you think? You kind of talked about the mighty middle. What strengths and opportunities, or even opportunities for improvement, do you see the entrepreneurial community in the Midwest having versus the coasts?
So, I just think that Midwesterners, we work, right? I got a T-shirt that says "Ohio girls work." We're used to hard work. My grandmother was a maintenance worker, right? And a plumber. My dad was an electrician. When you think about Detroit, you think Detroit builds. They build cars. They build all sorts of things.
Yeah.
And we've gotten to see parents and grandparents with great work ethics. And that's what we do. We don't unfortunately, we don't like to disappoint people. So we work really, really hard. And so I think as Midwesterners, that's the type of company, that's the type of person that I want to invest in. Someone with grit and determination. We also have incredible corporate assets. So, obviously in Michigan, you've got your Fords, you've got great hospitals, all of those things happening there. Ohio, we've got Procter and Gamble, Chase Bank,
Yeah.
Illinois, Eli Lilly, and it kind of, the list goes on and on. Those are areas that we are investing in. So consumer packaged goods and services, e-commerce, sustainability, artificial intelligence, and healthcare. Great things we do here in the Midwest. So for us, it's a no-brainer. Cost of living is low. I mean, you kind of like start to get down the list. And it's just the perfect place to do it. Our exit valuations are similar to our counterparts on the coast, but you have to put in less money because it just doesn't cost as much to pay people working at your organization. So I don't know. I think it's just a little bit different. Now, are there challenges? Absolutely. There's just not enough capital in the Midwest. But what's happened with 2020 is we're starting to see a balance, and we're also seeing that people from the coast, they're not flying in, but they're zooming in, and they're hanging out with people that they normally wouldn't have, and suddenly they're seeing different deals. We had the opportunity to lead around with a company that's relocating from New York to actually Ohio, and we had to like fight to get into the deal, and it's like, fighting to get into deals in Ohio, Michigan, Indiana, Kentucky, like all this, that doesn't happen. Like people are like begging you, like, we'll add more to this round. Yeah, we got room. These out on the coast, like people are fighting to like get into a $2-3 million round. They'll be oversubscribed by 5 million. And so I think that's kind of like, another one of our great things that we do that is a challenge for those people out on the coast.
Yeah, that is funny that you say that, like fight to get in kind of thing, because I noticed that like anytime I'd go to San Francisco and you'd be talking to a VC out there, they're like just really tight-lipped about like, yeah, we don't want to like network. We don't want to like talk too much. Like we don't really talk about our companies or anything like that. And then like out here, people are like very like kind of sharing, and they're referring people to resources a little bit more than that. So it's really funny that you're like, oh yeah, it's because the competition is just like crazy out there. Although like, then I think like, if you look at like the ratio of like amount of like dollars that go into research that or number of PhDs compared to like venture capital on the coast, it's like we put so much money into those things and have like so many like people in STEM careers and things like that. And then the venture capital is like very little in comparison. And then you go to the coast and it's like, they've got like, so much venture capital for like every one PhD that they have walking around. So it's kind of interesting. I'm like,
yeah, absolutely.
I guess. Do you find, like, this is completely off topic, but like, do you find that, that people tend to be or investors tend to be a little bit more conservative in, not politically, but like when they go to invest in companies in the Midwest? Do you think that they're like a little bit harsher on the founders, or like a little bit less founder friendly, just because it's kind of like a more thrifty type of mentality out here?
I think there is a fear that the company will have difficulty capitalizing itself. And so sometimes coastal VCs struggle with seeing the capital path. If they're putting money in, what if people in their region aren't putting money in? And then who's going to like help save and help that company survive over time if it's necessary that revenue doesn't catch up with growth? So I think that does happen. If I think about it from a lens of women and minorities, I think that kind of applies as well. So there's a fear that company won't be able to capitalize itself.
Yeah.
And yeah.
That's interesting, because I guess that even goes along, like a lot of the trends that we've seen probably over the last 10 years is kind of like this increasing amount of capital coming from elsewhere and not coming from here locally. Whereas it used to be pretty, like 2 to 1 kind of, where it would be like you get $1 from a local venture investor or angel investor, and then you get $2 from like the coast or something like that. And it was kind of like why is my camera all weird? It was kind of like
that was like a magic trick. You made that happen.
I know. I don't know. I always do that. And then if it doesn't work, I just look like I did something weird. But yeah, so anyway, I feel like that like local, like feet on the street kind of thing, we used to see a little bit more strongly where like that $1 was coming from somewhere local that was like really like helping keep an eye on things, and then like the $2 from elsewhere. And now it's more like $13 from elsewhere, $1 from here. So I do wonder if like that is part of it, is that the people are kind of like, who locally is going to be your person. So
is that what your research is finding? $13 coming from elsewhere?
Mm-hmm. Yeah, it's gone up like over the last 10 years. It's been more and more and more and more. And it was like $7 a couple of years ago, and then the $13 more recently.
Because I think in Cincy we're at 8, which
really?
which is much lower than what you're saying.
It's getting up there. Like I feel like keeping it below 7 is probably like where I've seen things be most healthy, is like when it's 7 and below. So I feel like 8 is reasonable, but still a little bit high. Anyway.
Interesting.
Like now, like nerd out. But yeah, like it does seem like a lot of things like are gelling and moving when it's like that ratio is lower, and not because that ratio is lower, but I think that speaks to like the health of what's going on locally. So it's good to have like Lightship and like other firms starting locally, and you're kind of like able to kind of be.
I'm having a blast in Detroit. Like I'm not there this week, but I'm there every other week. So I spent Christmas there, and I'll be there next week. And
you hired someone, right?
We did. We have a project manager there in town. She's absolutely amazing.
I'm forgetting her name, but I spoke to her, and she is like the most delightful person.
She is. Her name is Siobhan, and she's.
Oh my God! I was like, why can't I remember her name?
Yes. Oh my gosh! Like boundless energy, like the Energizer Bunny, and just so brilliant. Yeah. We're just lucky to have her. Any project we've got, any company, like she quickly onboards, understands who they are, what their needs are, and the things that she's helping our founders with in Detroit are really, really cool.
Yeah, I talked to her in the beginning of December, I think, and the conversation was like I was just like, I love her. I'm so glad she's here. And she's not originally from Detroit. So I was excited that she was like, I'm like a new person.
Yeah. Yeah.
Awesome. Okay. Let's actually ask you a question.
You're great.
So what advice would you give founders when trying to stand out to investors while fundraising?
I think it's just as simple as like, be the person that just asks questions. And I think like revenue talks and hard work shows really easily. How to stand out to an investor, like be prepared for the meeting. Be really willing to say like, I don't know the answer to this. If there's one thing that like bothers me, it's when someone gives you a quick answer. And there's no depth to the thought process. I'd rather have the right answer than like just a quick answer.
Yeah.
And so I think being vulnerable is helpful. Letting an investor know like what you actually need help with. But for us, like, these are relationships, like long-term relationships. So how do you stand out? Like not asking for money, like meet us before you need it. Like well before you need it. We're not closing in 2 weeks. It's just an impossibility in most aspects. I think that works other places. It just, for me and my first fund, that's not going to work. So what stands out is like a great personality. And someone that I know is going to like take it all the way to the end. And when you meet it, you know it.
Yeah. I think that this is kind of like your advice that all shifted during the last year, or do you feel like this is kind of just standard? Like, yeah, like this is what you need to do. Global pandemic craziness going on or not?
I think this is always the case. I think it's always the case. And I think I know it more now today than I did when I started the accelerator in 2017. I think that there is a personality type. And when you see it, you understand it. And also a person's ability to like grow a team matters. A person's ability to like really tell the story, not just pitch, but like explain the dream and where it's going. Even if it feels outlandish to other people, like, can they share an outlandish story that an investor will believe?
Yeah.
I don't know. I don't think it's changed. There are just dynamic personalities. There is, when someone says a person has it, like, it is a thing.
I like that. Yeah, that is true. There are just some people you're just like, oh my gosh.
Yeah, like some of our friends, like Nash from Undock. You meet him, that dude is like, I just sit there and I just want to listen to him all day. Huh?
I've heard so many good things about him.
Oh my gosh. Oh my gosh. And like a little known fact is that his nieces are the McClure twins. And yeah.
Like the pickle people?
No, the two little black girls, they're twins. They're absolutely adorable. If you look them up online, like I have 1 million followers on like Instagram. Like, so he comes from like this little dynamic family.
Right now, and also, I will die 1,000 deaths for the fact that I just thought you were talking about McClure pickles. Like, those pickles are great. Like,
I'm like, I don't know. Do they have pickles? Maybe they sell pickles too.
No, they don't. This is the stupidest thing ever that I just said.
I don't know.
That's so part of the Cackle 2021 edition.
I love it.
That's awesome. Oh, that's so cool though. Like, I would have to look that up because I haven't even seen them.
Yeah. So we're I don't know, like every one of the founders, Melanie from Hot Hijab, and oh my gosh, Amy from Prove, Kobe from Visual, like every single one of those people, I just want to hang out with them all the time. I know they can't. I'm not really like, I'm a fan too, right?
Organization, or you start a venture capital firm that you can just stalk all the people that you think are so cool.
Oh my God. I love their Instagrams. Like, it's my favorite thing. It's my favorite thing.
It's so great. Oh, so I know you have to leave in like 2 minutes. So what is briefly, what is the like on the horizon for Lightship Capital, like business wise? How are you looking forward to 2021? Are you like, how are you feeling?
I'm feeling good about it. We've got at least 12 to 15 investments that we'll do this year. So that's a lot. That's a lot of money too. So that's the kind of big thing happening this year. Yeah. We'll launch programming in Detroit in 2021. So that's super cool. So we'll have some programming actually in Detroit, Toledo, and Cleveland, which is exciting for us. The team is growing. And so we just kind of keep bringing on more and more people. Like we started as just like 3 co-founders, and now, I think we're 11 at this point. We're starting our 5th year, and it feels pretty amazing.
Yeah, that's awesome. I love that. Yeah, I'm excited to keep track of you guys and see like how this year unfolds, because I feel like many things, like it's going to be many great things. So it was a delight to have you on. And next week, I'm super excited too. We have Melinda from
Melinda. Yeah. Melinda just finished a book, I think.
Oh, really? Oh my gosh. I'm going to have to like do all my research before next week, but I'm super excited to talk to her. And she's in California. So it's going to be, normally we do these at like 10:30. So we're going to do that one at 1:30, but I'm like, cool. I was like, January's shaping up.
It's going to be good. Good month of women.
Yeah. Yay. Okay, cool. Thank you so much for joining. And I will hopefully talk to you again soon.
Awesome. Thank you. Bye-bye.